Is there a chance there will be widespread beats this season due to all the down guidance? If companies forecast it with a strong dollar, wouldn't that really help them beat sort of down earnings?
Well, to be clear, that's another permeable thing to say. Okay, now all the earnings that we missed on not one person who has that view called the strong dollar and its impact the whole way down. But now they're quite certain that that is now going to become a tailwind because the dollar's coming down. The dollar on a year-over-year basis is down maybe 1%. 1%. That's not going to move the dial. What moved the dial on earnings was the dollar going up big time, from up 20% off its generational low. You know, if it just goes down 1%, it's kind of like oil. Like, I mean, we showed it in the macro deck, and I don't know if Josephine can call these up right away, but if you show the earnings comparisons in the second and the third quarter, we have two charts, Josephine, yesterday that I kept toggling back and forth with. You can see what the average price of oil is today versus the first quarter of last year. We're talking much lower. You know, we're not talking about a little bit lower. You know, these things are ongoing. These producer price pressures are ongoing. These margin pressures are ongoing. Not a little thesis that the dollar is no longer going up is going to save your entire complexion of how you think about the earnings season. You know, look at that in the subheader. You know, if you look at energy, the average price of WTI crude was $48.57 versus just being currently $34 or thereabouts in the first quarter of this year. All those S&P earnings, and she's toggling between the second and the first quarter comps being year-over-year comparisons. Every sector in the S&P 500 is comping against positive comparisons. Every sector. So you can't, don't boil that down to just a dollar. I think you're going to get killed. I mean, you really think about the financials in particular. I mean, the financials, it's not about the dollar. It's actually more about rates, interest rates. A lot of companies out there are sensitive to that. So again, lower demand, lower interest rates, the dollar barely down year over year. That's why we are vigilantly bearish on being long corporate earnings and being long high yield or junk bonds.